Welcome back to Alpha Recap, the weekly rundown from stockalpha.ai. I'm Mike. Today's show pulls together the big themes from our July 11th and 12th research synthesis: AI priced into valuations, premium healthcare, and the execution risk that keeps analysts cautious. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks, Mike. Great to be here. Lots to unpack from this week. A consistent thread of huge optionality paired with the reality that much of that upside already lives in prices.
Let's start broad. How did the market feel after the close this week?
Overall, the markets closed with tech showing strength and healthcare holding steady. But the tone was cautious. You could call it constructive but guarded. Narratives like AI were clearly driving interest, yet analysts repeatedly used neutral stances because multiples already bake in success. Right. The research kept circling back to 5 themes: AI as priced-in optionality, premium healthcare with durable cash flows, sensitivity to execution in macro, single product to platform transitions, and finally, the importance of probability-weighted optionality rather than simple storytelling.
So, what really stands out here is the valuation trade-off. Big markets, but how much is already priced in? Let's walk through a few names. Start with NVIDIA.
NVIDIA stayed at the center of the AI conversation. As of July 10th, the stock was trading at about $210.96, and research noted a price-to-earnings ratio of about 31.25. Analysts' mean target was near $302. The core take? NVIDIA remains the dominant AI accelerator provider, with new rack-scale systems and fresh product families like the Vera Rubin GPUs and a Vera CPU helping the upside case. But the report was careful. A lot of the upside is already priced in, and execution or competition could create volatility.
So tons of optimism, but analysts were basically saying the bar is high.
Exactly. The addressable market is large. That's why multiples look elevated. But that means outcomes need to be delivered. It's not just theory anymore.
Okay, healthcare was another big strand. Walk us through Eli Lilly and the other premium names.
Eli Lilly was highlighted for durable revenue and exceptional margins. The research cited trailing 12 months revenue of about $72.25 billion and a profit margin just under 35%. That's huge. Vertex, Intuitive Surgical, and Danaher were grouped as premium healthcare exposures. High margins, strong cash generation, concentrated franchises, and pipelines that offer optionality. But again, the multiples reflect future growth expectations, so analysts were neutral to cautious because you need to see pipeline commercialization and regulatory progress to justify those valuations.
Yeah, that margin on Lilly stood out to me. High quality of earnings seems to matter for these multiples.
Right. Cash generation and sustainable margins let companies fund R&D or M&A without strain, and that quality supports premium valuations. But concentrated franchises, like Vertex's cystic fibrosis dominance, increase sensitivity to single outcomes.
Short reaction. Let's switch to software and midcaps. Globant, Splunk, Okta, Twilio, DocuSign, Bill.com. Big differences across these names, right?
Yes. Take Globant, trading near $30 as of July 10th, about $29.96, with a trailing price-to-earnings ratio around 12. Consensus mean targets were roughly double the current price, which makes it a contrarian spot in this week's set. But analysts flagged delivery, margin pressure, and macro sensitivity, so upside exists, but execution risk is real.
And Splunk felt like the poster child for AI optionality, priced at a premium.
Splunk was interesting. It was trading at about $157 and carried a price-to-earnings ratio north of 100, about 103.22, with earnings per share trailing at about $1.52. The firm is positioned well for AI-enabled monitoring and security, and the ARR trends suggest product-market fit. Analysts still called out that the premium multiple implies a lot of execution needs to go right.
Yeah, that tracks.
Okta and Twilio showed that story too. Okta beat in the first quarter of fiscal year 27 and even showed early GAAP profitability, which revived investor interest in AI-enhanced identity security. Twilio was trading near recent highs, roughly $214.56, after an analyst upgrade, but insider selling was flagged, and that tempers the narrative. Bill.com had a notable gap, trading about $41.36, while analysts' mean target sat around $53.64, implying about 30% upside on paper. But execution and macro sensitivity were reasons for caution.
DocuSign was also a big call-out with the platform transition narrative.
DocuSign was presented as a higher variance story. The price was about $49.18, down sharply from a roughly $107 high. The company has strong cash flow, trailing 12 months revenue near $3.29 billion, and free cash flow about $1.25 billion, and low net leverage. Analysts frame the shift from e-signatures to intelligent agreement management as optionality that could broaden monetization, but the heavy repricing suggests skepticism. So, execution matters a lot.
Wait, really?
Yeah. The balance between strong cash and a skeptical market makes it a watchlist name, but it's far from a sure thing.
Short reaction.
Right.
Let's talk Tesla. Autonomy as optionality, but priced for a lot.
Tesla was trading around $407.76, with a price-to-earnings ratio above 300, about 356. Analysts noted Q2 momentum and early robotaxi rollouts in Miami, which demonstrate optionality. But the research treated robotaxi commercialization as highly conditional. Timing, regulation, and monetization are uncertain, and said the multiple assumes success on multiple fronts. So again, neutral stance. Big optionality, but high expectations baked in.
Honestly, I was a bit surprised by that PE number.
It is eye-catching. That number basically quantifies how much future success is already priced into today.
Moving from company calls to cross-cutting patterns. What stuck out across the reports?
Several patterns. First, despite diverse sectors, research teams mostly adopted cautious base cases. Even the leaders got neutral stances because multiples reflect expected success. Second, AI was everywhere. It's both the catalyst for re-rates and a reason valuations are extended. Third, cash generation and margins matter more for premium multiples. Fourth, concentration risk. Customer or product concentration was a recurring downside theme. And finally, analyst mean targets often implied upside, but came with wide dispersion and caveats.
So narratives alone aren't enough. The data and KPIs have to back them up.
Exactly. For software, metrics like annual recurring revenue growth, net retention, and churn were emphasized. For medical devices, installed base and consumables matter. For biotech, R&D milestones and regulatory readouts are decisive. And for semiconductors, supply chain and data center order flows are key signals.
Quick reaction.
Yeah, absolutely.
Walk listeners through the research methodology and limitations. The analysts were pretty explicit about caveats.
Analysts leaned on consistent data points. Last traded prices as of July 10th, trailing 12 months revenue, price-to-earnings ratios, profit margins, analyst mean price targets, free cash flow, and leverage. Valuation frameworks included absolute multiples, growth-adjusted assessments to see whether multiples imply required growth, peer comparisons, and optionality valuations where outcomes are probability-weighted. But they were clear that consensus targets are aggregates with dispersion, not guarantees. Execution risk, macro cycles, and technological shifts produce wide scenario variability.
That probability-weighted language is helpful. It makes optionality tangible rather than mystical.
Exactly. Think of optionality like a menu of possible outcomes, each with a chance of happening. The current price reflects a weighted average of those outcomes. If the probabilities shift, the price can re-rate quickly.
Let's get practical. What should listeners watch for next week that might change these stories?
Key signals. Any earnings or guidance adjustments from Splunk, Okta, Twilio, and DocuSign would be high impact. Look for product adoption metrics tied to AI rollouts, customer adoption of AI features, ARR expansion from AI modules, net retention improvements. In healthcare, watch clinical readouts and regulatory filings for Eli Lilly and Vertex. For autonomy, any updates from Tesla on robotaxi performance or city rollouts beyond Miami would be meaningful. Macro indicators that affect mid-market spend, jobs data, IT budgets, will influence Globant and Bill.com. And finally, insider activity, or M&A chatter, can shift sentiment quickly. Twilio's insider selling was flagged, so keep an eye on that.
Good checklist. Any final synthesis before we wrap?
The big takeaway? Research teams are constructive on long-term addressable markets, AI, biopharma pipelines, surgical robotics. But near-term stances are generally neutral because elevated multiples already assume success. So focus on high-frequency, objective KPIs rather than narratives alone. Analysts note that balancing optionality with discipline matters more than thematic enthusiasm.
Short reaction.
Right.
Before we sign off, a quick reminder on the rules we follow here. The analysis we discussed is informational. It isn't a recommendation to buy, sell, or hold any security, and isn't personalized advice. Analysts note risks, and listeners should consult a licensed professional for individual guidance.
Absolutely. Analysts used objective phrasing throughout. Analysts note, data suggests, momentum indicates, and emphasized uncertainty and execution risk. That framing is important for any listener thinking about the research.
All right, Jonathan, final quick hits. 3 takeaways for someone scanning this week in 30 seconds.
1. AI is priced in across many leaders, so look for hard adoption metrics to confirm the narrative. 2. Premium healthcare names are backed by cash and margins, but concentrated franchises mean single outcomes matter. 3. For mid-cap software and service names, execution and macro sensitivity will determine whether the implied upside actually shows up.
Perfect. Thanks for joining and walking us through all that nuance.
My pleasure, Mike. Thanks for having me.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll see you next week.